April 25, 2025, America Market Opening Summary and Analysis. Wall Street Pullback. Was the rally short-lived? Let's break down the key trends in the American market today. After a three-day rally, American stock futures retreated. The S&P 500, which was up 0.8% in pre-market trading, ended down 0.2%, giving back all of its earlier gains. Nasdaq and Dow futures also slipped slightly. Mixed investor sentiment surrounding tech earnings and trade negotiations drove today's volatility. Intel drops, Alphabet climbs, mixed results for tech. One of the biggest names in tech, Intel, saw its stock plunge more than 6% in pre-market trading due to a disappointing earnings outlook. Rising production costs and heavy investment in AI were cited as key reasons. In contrast, Alphabet, Google's parent company, exceeded expectations with strong earnings. A rebound in ad revenue and continued cloud growth boosted investor confidence. With tech stocks showing split results, investors should prepare for heightened volatility this earnings season. China trade talks still just a mirage? There were reports suggesting President Trump had a call with President Xi and that trade negotiations could happen within the next 34 weeks. However, China's Ministry of Foreign Affairs quickly denied any active tariff discussions, adding more confusion to an already uncertain situation. Conflicting signals following Trump's mention of a possible summit with Xi have only deepened market uncertainty. Dollar strengthens while gold and yen retreat. In the forex market, the American dollar strengthened, while the Japanese yen and Swiss franc weakened. This suggests a drop in demand for non-American safe haven assets. Meanwhile, gold prices declined by 1.5%, pausing their recent rally. On the other hand, American Treasury yields climbed for a second day, reinforcing their role as a stable safe haven. Interest rate strategy. What's the Federal Reserve's next move? Investors are betting the Federal Reserve could start cutting interest rates as early as June. 3 rate cuts are now priced in for the rest of the year. Federal Reserve Governor Christopher Waller stated he would support rate cuts if trade policy starts hurting the labor market. In contrast, Cleveland Fed President Loretta Mester told CNBC that a rate hike in June remains on the table if the economic outlook becomes clearer. Markets are now adjusting strategies to navigate this divergence in views. Weakening dollar, a signal of capital outflow. Michael Hartnett from BofA warned that the dollar may continue to weaken over the long term, with capital likely flowing out of American assets. He anticipates this trend will persist until the Federal Reserve cuts rates, a trade deal with China is reached, and consumer spending stabilizes. In other words, we could be entering a phase where global capital starts shifting toward emerging markets or Europe, calling for portfolio rebalancing. Today's recap. S&P 500 reversed course after a 3-day rally. Tech earnings split. Intel plunges. Alphabet climbs. Mixed messages on U.S. China trade. China says no negotiations. Dollar strengthens gold and yen weaken volatility persists. Divergent signals from the Federal Reserve on rate direction. Weak dollar outlook watch for capital outflows from America. Investors in times like these, calm analysis and strategic decision-making are more critical than ever. Navigate the markets with caution and clarity.